Hey, if you're looking to scale into multifamily investing, you want to be a smart investor making smart investments. Well, today we sit down with Jason Kenney, who has a theory and a process that he utilizes to help himself do just that. And today he's going to share that with you, how he breaks down his smart investments, but also his journey coming from corporate America, he and his wife, to investing in real estate, long-term rentals, out of market, and then scaling into passively investing before launching his own investment firm, Novo Capital Management. Jason has a great story with very relatable insights about his journey and what took him down this path. And he is going to help you be a better investor and a smarter investor. Make sure you check out today's conversation right here on Multifamily Insights. You probably got interested in real estate for the cash flow, the tax advantages, the equity appreciation, and the long-term wealth creation, not for the 2 a.m. emergency maintenance calls. But let's face it, maintenance can be the biggest headache when it comes to building up your real estate portfolio. And that's why I want to tell you about a new property management software called Hemlane. See, Hemlane is more than your typical software. It's really like having a property management support system. First, Hemlane provides 24/7 repair coordination. They have a network of vetted maintenance technicians and professionals in your area to handle repair and maintenance your property may need. Second, Hemlane helps you advertise your listings and even connects you to licensed agents to help find and place tenants. And third, Hemlane is ranked #1 by Gartner with an average of 4.8 star reviews on repair coordination. Learn how Hemlane can help you manage your properties with 100% transparency and control without the administrative work. And as a Multifamily Insights listener, you will receive 25% off for 2 months when you sign up. Just go to hemlane.com, that's HEMLANE.com, and use Multifamily Podcast 25 as the promo code. Again, that's hemlane.com, or just click the link in the show notes. Jason Kenney formerly worked in information technology as an analyst for a Fortune 500 financial services company and a Fortune 100 healthcare company. Now, he began investing in real estate while working that W-2 job and has since started to invest in single-family homes before multifamily syndications. Now, he started a real estate investment company in 2019 and left the corporate world in 2023 to focus exclusively on real estate. Let's welcome to the show, Jason Kenney.
Hey, John. Happy to be here. Thanks for having me.
Yeah, Jason, absolutely. It's great to have you on. I went over your bio at a high level, especially the part where you left your corporate job to pursue real estate full time, which I think is a goal of a lot of our listeners. Why don't you take 2 minutes and fill in some of the gaps in your background?
Yeah, sure. Happy to. So my real estate journey probably started about 15 years ago, and it was really born out of the desire to have a little bit more freedom and flexibility in my life. So my wife and I, we met when we were in our early 30s, and we were both pretty early in our corporate careers at that point. As you mentioned, I was in financial services, working as an analyst, and my wife was in sales, and actually still is. And soon after we met, she was offered a promotion that was going to take us from Tampa, Florida, where we were living, to Portland, Oregon. And after I looked at the map and realized about how far away from our family and friends that was going to take us, we decided to make the move. It was a really good opportunity for her, and of course, I followed. Put everything I had in the back of a YouTube trailer and drove across the country. But that really set off a series of events that kind of led us to where we are now. So we spent about the next 10 or 12 years moving every other year, chasing one promotion to the next, and lived in 5 or 6 states over that time. And at first, it was great. We were living a great life. We were earning great money and taking cool vacations, and ended up buying a beautiful home. But we started getting burned out. With each promotion came giving more of yourself. There was more responsibility, more stress, more travel, more time away from home. And for my wife, I think that was especially trying. Being in sales, she was traveling quite a bit. She was on and off an airplane probably about every other week, and she was basically living out of a suitcase. So despite the great money we were earning, it was kind of taking its toll on both of us. And it was about that time we were also feeling like there was a void. And we realized we had sacrificed starting our family to pursue our corporate careers. And we really wanted to start a family. So Through God's good grace, we were able to get pregnant. We had our first child on the way, and we started talking about what the future was going to look like and how that was going to play out with my wife working full time and traveling, me working full time. And we realized we were going to need to make a change, right? We weren't going to get to where we wanted to go doing what we were doing. So um, we, uh, we started to think about what that might look like. It was about that time that I actually started reading Robert Kiyosaki's Rich Dad Poor Dad. So I had my purple book moment, and it was really a timely read because based on where we were in our life, I realized what we really needed to do was leverage the incomes that we had spent years building to acquire assets that would actually generate income for us. So we realized the best way to do that was probably through real estate. But I didn't know a whole lot about it at the time, and so decided to start taking real estate courses. Spent the next couple of months, learning about the different ways to invest in real estate, how to, analyze deals and research markets and all the things that you really need to do and have a basic understanding of if you're going to invest in real estate. So soon after that, I built a team, started investing in single family properties. These were the ugly houses in the nice neighborhoods. I would buy them and renovate them and rent them out and hold them for long term cash flow. And it was working well. We were slowly growing our portfolio. We were cash flowing, things were going well, but it was about that time that my wife had to go back to work. So we had taken a couple of months parental leave when our first child was born, and got to spend every minute of every day with him for the first 3 months. But of course, that came to an end. And, she had to get back on a plane and start traveling again for work. And John, I clearly remember the day she was standing in the doorway of our home, getting ready to leave, and she was just crying. And I felt awful. I felt
Yeah.
on some level like I had failed, that we weren't quite in the position that we wanted to be in. That she had to, leave our newborn behind and start getting on an airplane and traveling again. So that was a difficult time, but I knew we were on the right track. Like I said, we were cash flowing, things were going well. We just weren't quite where we needed to be. So I started looking around for other ways to invest that might help us get to our goals quicker. And that is ultimately when I kind of stumbled around or stumbled across apartment investing, specifically multifamily syndication. So for us, it's been a great experience.
Yep.
We've actually had better returns. We get passive income without the hassle. We get to invest alongside other investors, and we get to invest with professional teams of sponsors. So for my wife, it's really been a game changer. She's been able to take a step back from her corporate career. She's working from home. She doesn't have to travel nearly as much as she did before. She gets to be around our kids every day. And for me, like you mentioned in the introduction, I've been able to step away from my corporate career. I started my own real estate investment company focused on multifamily acquisitions and management. And ultimately, I'm just really passionate about helping other people achieve the same level of freedom and flexibility that we did through passive investing. So I've recently launched a YouTube channel. It's at Hassle Free Wealth, and that basically just focuses on showing people the ins and outs of multifamily syndication and passive investing, and how to do that successfully.
Yeah, man. Jason, I love your story. There's a lot that I personally can relate to, and I know many of our listeners can relate to. But in short, you talked about both you and your wife being in corporate America, working long hours, she being in sales, traveling a lot, and traveling over the country. You all moved from Tampa to Seattle. You're chasing promotions. You're moving often, and then you decide that there's something missing in your life. You decide to get pregnant, have a baby, and that starts to really amplify and kind of put a spotlight on the lifestyle and the travel and what's really important. And that's when you start to focus on your investing, right? You're buying these single family homes, you're flipping them. You realize that, hey, this is a lot of work, there's got to be a different strategy. Ultimately, you uncover apartment syndications, and that has been your focus both as a passive investor and now helping folks as an active investor through your own real estate syndication firm. I want to go back because, as you were talking about the dynamic between you and your wife, I and I was thinking about when my wife and I first moved to Chicago because it was the same thing. You know, she was a consultant, and every weekend she traveled. And before we had kids, it was like, whatever, you know, you do you, I'm do me. Let's see, let's both, work as hard as we can and see what happens, right? And it was great. I mean, obviously, she was gone a lot, but when we started seriously talking about kids, I remember sitting down and saying, "Hey, this can't work like that anymore. Like, you can't be traveling like that anymore. You can travel, but not like that, not every week." So we had to step back, and this is one of the things where, for us, we wanted to get into real estate. Part of our vision was, hey, we want to start investing in real estate, but we didn't own any properties at that point. And it wasn't until we really started to get serious on this vision. We bought a 2-unit building. And that was right before we had kids, but we started to really lay it out. We had bought the 2-unit building. And then when we bought our second property, it was right around the time when no, he wasn't born yet. We bought the second property. Wow, no, we bought the second property right when my first son was born. And we bought the third property right when my second son was born. And that was something that was really important for us because we knew we had to start really building up this portfolio to create passive income, and even just to offset the additional costs. I was in Chicago, so those child costs were rising up. And I think that's something a lot of folks understand, right? For you, you were investing in real estate, you started doing single family flips, but it seems like there was something missing that took you to apartments. So what was the challenge you were trying to face where, you were doing the flips, you're doing the signs. What was the challenge there?
Yeah, it's a great question. I think I underestimated when I initially set out to create passive income exactly what that was going to look like. And while the income was essentially passive, the effort going into creating that income was not passive. And being fairly new to real estate, I picked single family like a lot of folks do because I wanted to keep my mistakes small, and I was successfully able to do that. But I didn't appreciate how much time and effort actually went into building a portfolio. So we were after the passive income. We wanted the supplemental income, but it took a lot of my time and effort to do it. And I was spending nights and weekends with a newborn, researching markets, analyzing deals, coordinating renovations, talking to the broker, all these things. And after several transactions, I kind of realized, like, boy, what I've actually created for myself is a second job. And so we had that supplemental income, but it took a lot of work to do it.
Yeah, that passive income wasn't passive, right? And that's a fallacy so many of us fall under, right? This belief that you can create it. So in this case for you, were you doing more like long-term rentals? Were you flipping? Like, what was your investing strategy with the single family?
Yeah. So our investing strategy was long term rentals. So we were always after cash flow, supplemental income. So we bought the properties and held them for long term cash flow.
And were these local?
They were not. So in
Oh.
that time, I was actually living in Colorado and in the Denver area, and the market was really difficult to find something that provided the kind of returns that we were after. In some cases, the properties didn't return at all. A lot of people were investing for appreciation and hoping that the properties would go up, but that wasn't really our game plan. We wanted cash flow from the start, so I actually put together a team that was in another state. After looking around and looking at different markets, I selected a market out of state in the Midwest, and once I settled on the market, then started focusing on building a team to kind of help me find the properties, renovate the properties, manage the properties, everything that you need to do to own a long term rental.
Starting to see why this took a lot of work, right? So you're talking about building a team out of state to manage these properties, and it sounds like you were able to do it successfully, which is amazing. But again, it was a lot of work and effort, so that's what allowed you to pivot into a different strategy. What was there a moment where you realized, you know what, this is just way too much effort for what I'm getting. Let me find another strategy. Like, what was that breaking point that kind of turned you over to apartment syndication?
I don't think there was any one big aha moment. It was more like a slow creeping chain of events. Every property took up a little bit more time. The portfolio started to grow and get larger and larger. There was more, asset management, managing the manager, keeping up after the property managers, going over owner statements. It was just the day to day activities involved with managing a portfolio that slowly started to build, and I realized, boy, this is taking a lot of work. Yeah.
Yeah, that makes a lot of sense, right? And it's one of those things too where, again, we're going back to the whole passive income thing. When you're after passive income, the biggest challenge is just understanding how much time it takes to, to invest in that, right? Because it's not passive unless you really build up a big enough portfolio where you can step back. And even then, I mean, the only real way to invest passively is through another deal, right? Where someone else is the operator and making those decisions, or through another form of investing, like note investing or something like that, where you're not really worrying about the day to day operations. So, you ultimately decide, hey, you know, if there's a thing, there's apartment syndications. What is that process like with you and your wife? Like, do you just start investing? Do you have a conversation together? Like, how do you make that pivot from investing in these long-term rentals to apartment syndications?
Yeah. So, before we even started investing in single family, we basically had a goal in mind, right? We talked about what we wanted to do, what we were really trying to accomplish with real estate, right? And I think it's important to start with the end in mind, right? To have a direction you're heading and know where you're heading and know why you're heading there.
Yep.
So before we got involved in multifamily syndications, also we wanted to make sure that those things were going to align with our goals. That investing in apartments was going to help us achieve the kind of goals that we were looking for. For us, it was passive income because we wanted to create the supplemental income that would eventually allow my wife to step back from her career. So that was a big part of it. We had tax implications, so we weren't looking to do things. We were looking to do things in a way that weren't going to create additional tax burdens for us. And we can dive into those things later if you like. But so ultimately, it was about, does apartment syndication align with our goals? And then once it did, we looked even deeper and started thinking about, well, what types of properties are we going to invest in? Reinvesting in brand new properties, lower risk, lower cash flow. Are we looking for value to add deals, that sort of thing? So really trying to find investments that helped us accomplish our goals.
Yeah, you mentioned understanding what your goals were, right? Passive income, want to have a great tax strategy. And I like the fact that you all were aligned. You know, I meet a lot of couples where one person wants to invest and the other is very hesitant. And that is a recipe for disaster, right? Because if you're both not on the same page, you certainly won't be on the same page after you make an investment, especially when things don't go right. You know, that as we know, no deal's perfect. No, every deal has some level of risk to it. Every investment has some level of risk to it. So you definitely need to have everybody on the same page with at least knowing why we're making these investments and what we're trying to accomplish, as opposed to feeling like one person is just running the show. Um, in your case, there, you all were aligned on what you were trying to do, what you were looking to go after, why a deal may make sense. Tell me about kind of the first passive investment you made.
The first passive investment we made in a multifamily syndication was with a sponsor in the Midwest. We picked the Midwestern markets. A lot of people refer to them as flyover markets, right? I know you're in the Midwest,
You know, I don't
so
like
hopefully
those
it's not
terms,
hurting your
man.
feelings. But for us, those are the type of markets that we're attracted to and we want to invest in. We're looking for more stable, linear growth markets. We don't want the extreme fluctuations. So those markets are appealing to us. But before we even invested, it took a lot of upfront work. I should not a lot, but it took upfront work to do some due diligence on the various sponsors, right? So we were looking for areas we wanted to invest. Then we searched for sponsors that were operating in those areas. Then we had discussions with lots of different sponsors. Then we talked about what type of properties, what type of business plans they try to execute, right? And then we ultimately settled on the ones that we felt were best for us, that we had the best interactions with, and that we thought would help us accomplish our goals.
Jason, I think that's a great strategy. Obviously, you took a lot of care and diligence in your process to understand where you wanted to invest, what your strategy was, vetting those operators before making that investment. And that's the key, right? The hard part for passive investors up front. It's figuring out who you want to invest with, not necessarily just writing the check. So kudos to you for having that knowledge and going through that process early on. For those folks who want to follow in your footsteps, what advice would you give them on vetting markets and vetting sponsors?
I think when it comes to markets, I think you should have a basic understanding of the market you're investing in, right? When you get an offering memorandum from a sponsor for that's going to present an investment, they're going to have a lot of information about the market. You should be looking at that. You should know why you're investing in that market. You should probably be doing some research on your own. Um, you should have a sense of why that particular market is a good place to invest. And as far as the sponsors, there's a lot of things you want to look for in a sponsor. One of the things I talk about that I try to advocate for is smart investing, and it's really an acronym that I used when I was investing initially, and still use now when I invest in syndications. But it's really, S stands for structure, understanding the structure of the investment. M is the model and the assumptions. A is the alignment of interest. R is the risks, and T is the team. So going back to your question about the sponsor, you really want to understand alignment of interest. You want a sponsorship team that is going to succeed when you as a passive investor succeed, and you want to understand how that investment is structured to make sure that that happens. You could be looking for co-GP invest, so that's where the sponsorship group will invest alongside the passive investors. You want to look for things like preferred returns, where it's not a guaranteed return, but if there is money coming out of the partnership, the passive investors are going to get a crack at that before the sponsorship team gets theirs. You want a team that has experience, specifically in the asset class that you're going to be investing in, right? You don't want a bunch of guys that are doing value adds and now they're going to do a new development deal and this is their first new development deal, right? So you want a team that has experience, that's preferably taken things full cycle, right? Anybody can buy a deal, but it takes a little bit more skill to manage it and take it through to disposition and to actually sell it. So focusing on the team, the sponsorship, the alignment of interest, all those things I think would help people make an educated decision before they invest.
Jason, that's gold, man. You just gave a great insight, and it's understanding how to make a smart investment, right? So S is for structure, M is for the model, the A is for alignment of interest, the R is for risk, and then T is the team. What a great insight, just in a way to think about how to identify the right deals to invest in. So appreciate you sharing that. I know you have now kind of transitioned where you're still investing passively, but you're also investing actively and teaching others how to do the same, helping others invest alongside of you. Talk to me more about Novo Capital, and then I want to get into your YouTube channel.
Yeah, sure. So Novo Capital really was, like I said, born out of a desire for me and my wife to live a more free and flexible life. Having a corporate background, we relate to people who are in that same experience, right? Where you've dedicated a good portion of yourself to achieving a level of success in your corporate career, but this oftentimes when you achieve that level of success, there are costs involved also. And unfortunately for a lot of us, that's our families that tend to suffer, right? So we started this company to help people that were in a similar position that we were, who gave a chunk of their life to their corporate careers, give them another avenue to take that income that they've worked so hard to create and invest it in a way that provides freedom and flexibility and ultimately long-term wealth for them and their families. So, they can ultimately use that in whatever way is most meaningful to them. For us, it's our young children. We want to homeschool our kids, and that's our goal. And my wife and I feel very passionately about that. But for other people, it may be something different. So Novo Capital is all about helping busy professionals leverage the work that they put in for all those years and make it start working for them. So yeah, that's just a little bit about Novo Capital.
Yeah, man, I love it, and I love the mission because again, as someone who's worked in corporate America, I get it completely, right? It's a lot of years, and what ends up happening to people as well, and I'm seeing this a lot within my friend group and other folks, I'm sure you're seeing it too, is once you get about 15, 20 years into your career, you start to really step back and say, "What am I doing? Is this it? Is this what life is? Is
Yeah.
this what the next 15, 20 years is going to look like?" And you can call it, you can label it if you want to label it, but I think the truth of the matter is we all have to go through this process where you start thinking about your life and the values and what kind of lifestyle you want to have, especially those of us who are parents, because you only get one shot at life. And it's not passive income just so you can sit on the beach sipping mai tais. It's passive income so you can spend more time with the people you love doing the things you love. And the truth of the matter is, your children aren't gonna remember or think about, "Oh, mommy's gone because she's earning money for the family, and that's why she's gotta be gone, for 40 weeks a year." They just gonna know you're not around, you know? And there's a balance there, and I know we wanna provide for our families, but we also wanna be present for our families, and this is where we have to think through how do you marry the 2? And I love the fact that you're giving people an option to say, "Hey, we're not telling you to quit your job or anything like that. What we're saying is figure out a way to create additional streams of income so you have more options. So you can decide, hey, you know what, I'm only going to work 3 days a week in the office and maybe spend 2 days at home or whatever the case may be. But you want to have options and money gives you those options. So appreciate you sharing a little bit more there. I know you recently did a couple deals, right? We partnered together on a deal up in Columbus, and you got a new deal under contract. Can you just talk to me more about kind of where you're at investing wise in the portfolio and kind of your outlook?
Yeah, sure. So I still continue to look for opportunities to passively invest. The latest deal you just mentioned, there's another one I'm actually looking at now. So I love investing passively, and I also still do it on the active side. I love real estate. I enjoy every aspect of it, and I'm fortunate enough to have been able to step away from my corporate career and focus on real estate full time. So I actually just got a multifamily property under contract, going through due diligence now, all that fun stuff. But yeah, always looking for opportunities to partner through either joint ventures or co-GPs, and work with other people that have the same vision and the same objectives as I do.
I love that you're on both sides of it too, right? Because I think sometimes um, guests can lock in on what they're doing and raising capital, and there's nothing wrong with that. I get it, but I love that you have the perspective of both the active investor and the passive investor. Like you know exactly what that person's thinking when they're debating whether or not they want to write that 50,000 or $100,000 check.
Yeah.
Sometimes these people they don't, because they only invest in their own deals that are not necessarily passively investing in other deals. I love the fact that you wear both hats because even as I've grown as an investor, it's given me more perspective to
Sure.
look at a deal differently, to look at the operator differently. And when I was starting out, I remember I used to analyze every number, right? Everything I would see, I would go hard at it. I will tell you now, on my deals we do that, but when I'm investing passively, it really comes down to the relationship. It's the person, it's the people. Do I like the team? Do I get the business plan? Because there's going to be some challenges and hiccups, right? And nothing's going to go flawlessly. But I want to make sure we got the right people. Do I trust these people to navigate whatever the world throws at them? That's what I'm banking on, right? I'm not looking at, line item 72 in a spreadsheet. I'm really locking in on, do I have the right people? And if I have the right people and the right business plan, I know that's going to solve 90% of the challenges that come up. So I love the fact that you're on both sides of this and you're able to invest passively, helping other folks who want to do that, but also now you're active and you're giving them opportunities to join you in that process. We mentioned the YouTube channel, so hassle free wealth. You're sharing more of your knowledge and your experience. Why did you decide to launch this?
I decided to launch it because I feel like there's a gap. There's a lot of talk about multifamily investing and syndication, and everybody talks about IRRs and cash on cash and all these things. But I think there's a gap in people really understanding what these types of investments are, how they work, what you need to be looking for before you invest, and kind of that 30,000 foot view before you start diving into offering memorandums and line 72, like you said. And to your other point, there's a lot involved in picking the right sponsors, picking the right strategies. And so it's really just a holistic approach to explaining to people kind of the ins and outs, how these investments work, what you want to look for, what you might want to avoid, and just having a more broad discussion about multifamily syndication and passive investing. So my goal is just to help people who are interested, specifically, people with a corporate background like me who have maybe the financial means, but don't have the time really to invest on their own. And so I just try to provide another resource for people to make a good decision and mitigate their risk if they decide it's something that they want to do.
No, I love it, Jason. The website or the YouTube channel is Hassle Free Wealth. I will put a link to that in the show notes. Check it out there. Jason, you mentioned earlier that when you started getting into real estate, you focused more on the long term rentals, but you were doing them out of state. You were managing it out, building out your team, transitioning to passive investments. Now you're doing more of your own active investment deals. As you go back to building out your team and you reflect on that, what are some of the lessons that you learned along that way? Because I know a lot of our listeners are similar to you. They might be in a market where it just doesn't make sense to invest in their backyard, but maybe they don't have the right resources, the right people to help them build that portfolio out of market. So as you reflect back on that, what were some of the lessons learned, some things there that worked well, and maybe a watch out or a thing or two that didn't work out as well?
Yeah, that's a great question. There's a lot of lessons I've learned. I think at a high level, I like to work with people with integrity. So I think finding people who have the same viewpoints, the same who have a level of honesty and integrity, you really want to associate with people like that, and that kind of takes care of a lot of the other problems. You want to kind of set yourself up for success, but you want to find people that have experience doing what you're trying to do. When I was putting a team together, I looked for the most experienced brokers in that specific market. I didn't necessarily, just start randomly calling people. I did some research on, who is what most well known, who does the most transactions, that sort of thing. And then, I think on the management side, when I was looking for people to manage the properties, I wanted somebody who specialized in the properties that I had that wasn't so big that my property was just going to get lost in the shuffle, but was big enough where, I as an owner might benefit from some of their relationships, some of the contacts they had. So somebody of sufficient size, but not really too big. And I think those would probably be the ones that stick out most for me at this point. Yeah.
I think that's a really good way of thinking of it. I wrote down 3 words: integrity, experience, and specialist. Looking at people who have integrity in the work that they do, have a great reputation, want to protect that reputation and do the right thing. Somebody's got experience, right? You want to find the person who knows how to do what they're doing or what you're asking them to do, but has a demonstrated track record. Like, this is not the chance to hope they know what they're doing. Like, find somebody who's got that track record, but then when you are working with a person on a more day-to-day basis, you also want to have people who know exactly what it is and how to navigate the nuances. So that's specialists. Because I know, when I've hired my first third-party property management company, they were a very good company, had great reviews, they had great experience. But what I realized later on is they didn't have the specialty experience with the unique asset class that I was investing in. And that's the thing that can be missing sometimes is someone has a great reputation, they have a great integrity, and maybe they can do, value add multifamily or they can do multifamily, but maybe not the specific business plan you're looking to implement. And having that person who's a specialist that has that skill set or the experience exactly doing the thing that you want to do, that's the thing you got to look out for as well when you're building your team. Because again, you don't want a jack of all trades and no specialists. You're going to have people on your team who are really good at that one specific thing so that you can build the right people and build the right team ultimately to execute. I want to fast forward back to one other thing, right? As you kind of go out for now, building up your portfolio, mainly as an active investor, what are you looking for in deals and opportunities? Like, how do you decide whether or not a deal is a good fit?
You know, Going back to what you said earlier, the market for me is the biggest. The market to me is more important than the property. I'm less concerned about the property. I'm more concerned about the market that the property is in. So I periodically will review certain markets, take a look at what's happening in those markets. Are things changing in the right direction, the wrong direction? But I definitely start with the market and I focus on the markets first. And then, I look for markets that are landlord friendly, business friendly, markets that have population growth. And then you want to start digging a little bit deeper and understanding, why are people moving there, right? Is it jobs? Is it quality of life? Is it cost of living? Like, what's drawing people to an area? But I like to get the full picture of the market first. And then once I'm within those markets, I tend to focus on secondary markets around major metropolitan statistical areas. I'm based just outside of Nashville, Tennessee. And for where we're sitting, or for where I'm sitting here, Tennessee, downtown Nashville area has gotten a lot of inventory. And that's kind of pushed rental prices down, occupancy up, although things are starting to turn around now. So for me, I'm looking for areas that are that have strong apartment fundamentals, right? I want areas where rents are moving in the right direction, where occupancy is moving in the right direction. So focus on markets first, and then really try to get an understanding of what the supply and demand in that market is also. So um, I'm looking for areas where there's oversupply, or excuse me, lots of demand and undersupply, right? You want people kind of competing for the housing that's available. And I love markets, John, where the barriers to entry to homeownership are high. I look for markets that it's difficult to become a homeowner, not because that's a good thing, but because generally, but because it's a good thing for multifamily. If there's a wide discrepancy between what it costs somebody to get into a single family home compared to what it costs somebody to get into a rental, that's probably going to increase your chances for success as an investor. So those are some of the things that I look for within a market.
And Jason, those are great data points to pay attention to, right? One, at a macro level, what's driving people to the area. You're looking at population, ease of doing business, job growth. But then as you go closer and go into the submarkets, now you're understanding what's the multifamily landscape. How's occupancy? How are rents? What's driving that? How is supply in general? And you also want to make sure that you understand how easy is it for someone else to just go and buy a house. And it's not, I mean, what you're getting at is ultimately we want to look at supply and demand, but we also want to understand, is this sustainable? What do the trends show me over the next 3, 5, 7, 10 years? What can we expect? And I think going back to where you started earlier, you talked about markets where it was more predictable, more easy to project, not necessarily these volatile markets where your highs are high, but your lows are also low. You're looking at markets where it's a bit more sustainable. And I think it's really important because sometimes people just look at population growth or rent growth for 1 year or 1 quarter and they run off. And it's like, yeah, but is that sustainable? And you have to really dig deeper into the market dynamics to understand if that is going to be sustainable for the next 3, 5, 7, 10 years, as opposed to a market that just got hot over the last 2 or 3 years. So really, really great insights. And I think it's something that can help a lot of investors if you get back to the fundamentals of investing and projecting what should happen in the future based on all the information that is available. Hey, again, if you want to check out Jason and check out his YouTube channel, you can go to at Hassle Free Wealth. We're going to put that into the show notes. Jason, right now we're going to go and transition to our round of insights. When you think you found a great deal, asking the right questions could be the difference in finding a stud or a dud. Listen, we've put together a new guide to help you out. It's called 7 Questions You Must Ask Before Investing in Apartments. Now, in this guide, you're going to learn how to uncover red flags, quickly identify underwriting risk, vet sponsors and team members, and confirm key assumptions. Now, this is a guide that's going to help you be a better investor, whether you're an active investor or you're a passive investor looking to partner with other operators. Asking better questions is the key to identifying great opportunities. So download this free guide. Go to our website, casmoncapital.com/7 questions. That's the number 7 questions. And you can access this free guide today. To make it easy on you, though, we've put a link in our show notes. So you go to the show notes, you can click that link and access the guide right now. This guide's going to help you make better investment choices, asking the right questions to build your portfolio. So be sure to download it today. Give me a failure or an apparent failure that sets you up for later success.
Well, that's a good one. I think, for me, it was probably my college experience. I had a college experience that required, for a variety of reasons, me to withdraw from college on a couple of different occasions. I had some serious car accidents. I had a medical issue. I had a couple of things happen where I was not able to complete college as quickly as I wanted to. But having to withdraw, take a step back, regroup, and then go back, having to do that actually more than once, I think set me up for long-term success. It really taught me, the discipline and the grit that I needed to really complete and get through that. And I think that determination really helped me and carried over into other areas of my life too.
Give me a digital or mobile resource or technology that you would recommend for our listeners.
Ooh, another good one. Lately I've been using Crexy. It's been great for me on the multifamily side, although I think it does residential also, but it's really a tool used for market data and for insights, property records, that sort of thing, demographic information. So that has been really helpful in my business.
Give me the book that you've recommended or gifted the most in the last year.
Have not gifted any books in the last year, but I have read quite a few. Probably the one I have recommended the most is Never Eat Alone. Great book about building personal and business relationships, about offering value, providing value to others, and just trying to be a good resource and build authentic relationships. So that's a good one.
What's a daily habit that helps you stay focused on your goals?
For me, I think reminding myself of my why. I start every day with my why, and everybody's why is different. For me, it's pictures sitting here on my desk. It's of my wife and my children, and reminding myself of my why each and every day is a motivator for me and helps keep me on track. Things inevitably will go off course from time to time, and you inevitably hit obstacles and speed bumps, but having a clear why and knowing why you're doing something keeps you on course.
Give me your number one insight for investing as a passive investor.
I would say if you're going to invest passively, and we talked about it a little bit earlier in the show, invest smart, right? Focus on the structure, focus on the model and the assumptions, look for alignment of interest, know the risks that are involved, and know who the team is, that's behind the investment.
All right. And you are close to Nashville, so out there in Tennessee. Give me your favorite place to grab a bite to eat.
There are a lot of great places to eat here in Nashville, and I wish my wife and I got downtown more often. But we like to go to a little spot closer to us, which is in the Murfreesboro, Franklin area, and it's called Urban Market. It's all pasture raised, homemade stuff, and it's just a great place to visit. Great vibe. It's a good place to visit.
Urban Market it is. Well, Jason, great stuff today, man. Enjoyed our conversation. A couple things stood out. One, just your story, listening to how you and your wife started this journey, working in corporate jobs, traveling a lot, moving to chase these promotions, but realizing there's a void and there's something that's just missing in general. That fulfillment wasn't there. So trying to figure out how do you get there? You left your W-2 job, focused on real estate, first starting with the single family rentals, transitioning to flipping house. I'm sorry, not flipping, but transitioning into syndications, and now kind of leading your own deals as an active investor and helping other folks grow and scale in real estate. And I love what you hit at, right? Just understanding how to look at deals, look at it and ask yourself, is it a smart deal, right? So do you have the structure, the model, the alignment of interest, the risk, and the team that can lead to success? That's what you're looking for. And I love the way you broke that down. It's really easy for us to understand and to follow. And then last, just really understanding your why, coming back to it. Why are you doing what you're doing? Because you can go down a path and realize that this is not passive income. This is actually just a second job. And I think that happens for too many investors and they don't want to admit it. So if that's where you're at, step back, figure out your why, try a different strategy, but make sure you're locked in on what you're doing and why you're doing it, and not just doing it because you're already down that path. So I love the fact that you were able to do that and stop, reassess what's working, what's not working, why is it not working, what changes need to be made. And that's really important for all investors to take the time to process that so that they can make those smart investments. Again, if you want to learn more from Jason, check him out on his YouTube channel at Hassle Free Wealth. We'll put a link to that in the show notes. Jason, thanks again for being a great guest and coming on the show today. We look forward to staying in touch with you and hope you have a great one.